Hello, James. Welcome, mate. You're from a different location every other week that I speak to you. Where are you today? Kangaroo Island, isn't it?
That's right. A little bit different today. Kangaroo Island. It's where we've got a family sort of beach house, so we're over here for a few days with nice weather.
Nice, nice. And I guess you're pondering um, the takeover trend that seems to be happening in the mining sector, because that's what your piece is all about today. It looks like now you've been calling for this. You've been noticing, or at least saying that the next stage of the resources cycle is M&A activity, and we've seen quite a few things of late. It's been picking up, hasn't it? I think, what was the latest one? Northern Star, was it?
Yeah. So there was a big deal this week, De Grey Mining, which was taken over by Northern Star, and this was a $5 billion deal. So it's the biggest undeveloped precious metal takeover deal that's actually happened globally. So it is a big deal in mining. And I guess it's just what I've been talking about with the trend of M&A activity building in mining in 2024. And we've actually been on the receiving end with that, with diggers and drillers. So that's our paid readership group. So it's been really good to see some activity, even though this is still what you'd probably call a bear market for junior mining stocks. There's still some fireworks happening, which is a really good sign.
Yeah, I mean, you in your piece today, you outline how investor sentiment like typically flows down the mining pecking order from starts with producers, then kind of goes to explorers. So with the three recent takeovers in mind, what specific market signals suggest that we're approaching that phase where more speculative junior miners come to the forefront for investors?
Yeah, so it really just follows down the pecking order. So you'll see producers. So if commodity prices start to go up, producers will tend to rise first. And then you'll get, say, late stage developers filtering in as the next sort of going down that pecking order. And then finally, you start to see some activity within the explorer space. So the very sort of more speculative mining companies. And this is just follows the natural progression of any sort of mining cycle, commodity cycle. And as that happens, you also see M&A activity pick up, which is another really good sign that we're sort of on the upward leg of the commodity cycle, which is what we've seen several examples through 2024, but not just gold. So De Grey is a gold company. We've seen examples in copper, lithium. There was one earlier this year, and other commodities as well. So just this sort of multi-commodity basket um, of different metals, different minerals, gaining some M&A activity. So it's a really good sign for the sector.
Yeah, a lot of the things we've spoken about in the recent past is how you identify potential takeover targets. Now, one of your criterion for that is you focus on smaller companies with a decent deposit size. Um, I was going to ask, beyond sheer size, what other geological or economic factors make a junior mining company's assets particularly attractive to the major miners?
Yeah. Yeah, so we do as one of our strategies with diggers and drillers, we take a bit of a focus. It's not our only focus on acquisition. So companies that could be the target of a buyout from a larger mining company. And as you said, size, so the scale of the deposit is probably the key factor. It's the number one factor. But there are other important factors as well. Things like grade, metallurgy, so the engineering of the mine, but then just the potential for exploration. So if a major is going to move in, can they add to that resources through sort of expansion through exploration, and just push out that life of mine? But coming back to the size factor, just with these projects, and that really just comes down to economy of scale. So imagine you've got a big gold miner who's producing, I don't know, 2 or 3 million ounces each year. They're not going to be wanting to look at a tiny little gold play, which is hardly going to move the dial on their sort of annual production. They're going to want a big project that's going to make a meaningful impact to their annual output. So that's just where Diggers and Drillers really focuses on large scale undeveloped projects, and that's where the key focus is for acquisitions.
Yeah, you mentioned that some companies with significant underdeveloped deposits are trading at only a slight premium to the early stage explorers. What market dynamics are what's creating that mispricing, and what catalysts might trigger a revaluation on those companies?
Yeah, so I don't think it's, well, maybe it's a mispricing for junior mining companies in general. So I'll try to clarify a little bit. So you've got these companies, these junior mining companies, which have large deposits, but then you also have junior mining companies like small explorers or early explorers, which don't have an asset at all. So I think loosely all junior mining stocks are heavily undervalued. So if you were going to go into that space, you should probably look at a company that already holds a resource, because this is probably where the best value can be captured. So you're only paying a slight premium for a company with a known resource, a known asset. It hasn't been developed, over, say, an explorer, which doesn't have an asset at all. It's just still sort of scratching the ground, looking for a
That
project.
goes up the risk scale then, doesn't it, as well?
Exactly, yeah. So explorers will definitely come with a lot more risk. So in this market, I think focusing on those, you could call them a late stage explorer, a company that already has a resource in the ground, and that's going to be more attractive from a takeover perspective. But I think it will also benefit earlier or first when mining starts to sort of tick up to a sort of more speculative phase.
Final question, James, for today's piece. Looking ahead to 2025, you've connected potential rate cuts and increased liquidity with Trump's market-friendly policies. How do you see these macro factors specifically benefiting the junior mining sector versus other parts of the market?
Yeah, so I think liquidity is really important for any sort of more speculative market sector. So you need investor funds coming into markets. We haven't really seen, I don't think, much of the North American market showing much interest in Australian junior companies. And I think this is important, as well as Australian investors into this market. I think that's what the last cycle saw, a lot of liquidity from going into the junior mining space from the North American, European markets, because these are just such huge markets. So I think this liquidity, so rate cuts, will be really important for putting more capital into these speculative sectors of the economy. So I think Bitcoin and crypto is still capturing a lot of that attention. But I think once investors start to see the sort of really the huge value that's in mining, especially within the small cap space, I think that will start to pull away more capital from those other sort of speculative fields back into mining.
Cool. And for those that are interested, there's a new report out that you've done. It's a presentation with myself, the new Big Four, which kind of speculates on where that capital could potentially go in the resources sector. It's a pretty interesting report, so do check it out if you're watching. And also you can check out James's editorial today in Fat Tail Daily. The link's below. Thank you, James. See you very soon. Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.